It's been a big week for AI-related names. I mean, Oracle's obviously going to steal the thunder. Nebius, because of the deal with Microsoft, is obviously the runaway winner, up 36%. But many of the names, especially in the power area, have done well. Vistra, Vertiv, for example, GE Vernova. You bought more, Rob, NRG, and you bought more Monolithic Power Systems. Tell me more.
Correct. It's all about data centers and getting and regulating power. It's our favorite way to get exposure to data center consumption. NRG specifically, high quality company that is not that expensive at 20 times. Strong balance sheet relative to its utility peers. Highly efficient, low emission nat gas is what they're focused on. And if you believe in the consumption story for data centers, this is going to continue to be a huge beneficiary. You know, we were very early on Vistra. We were early on this trade as well. We think there's room to run. If you think about Monolithic Power, kind of totally different, it's regulating the usage, and there's so much need for regulating power usage in these businesses. Now, that's something we don't usually do, which is pay 44 times earnings for a company. It's not central to what we do as money managers. But we think the fundamentals are so strong in this company, and this is one you can own in a new position for us.
The flip side of maybe questioning the fundamentals of a company, you sold half your Adobe, which is notable because it's sort of the have-not, at least one of them, perceived by the market. In the whole AI arms race, down 40% over the past year. They did have earnings. Let's look at Adobe, guys, if we could, please. They did beat. They did give better than expected current quarter guidance. The stock, meh. I mean, I think the jury is still out, that the market is not so convinced that they're going to be as formidable as some would have expected in this whole new area. Is that why you sold half the position?
We did.
Ahead of earnings?
We sold it ahead of earnings yesterday. It's funny, it bounced up a little bit after earnings, and I was like, oh, we made a mistake. But we'd been patient for so long, and from our lens, we felt like we were swimming against the current. We had some losses that we could take. There's not a lot from a portfolio positioning standpoint this year, and given how long we've owned this, that we could take losses in. Overall, earnings were solid, though. The AI revenue continues to come in above expectations, so we kept a little bit of it, but we wanted to reduce it in favor of some other things.
All right, we'll wait to hear from Jim Lebenthal and what he's done with his position, too, because he said that this earnings period was going to be the line in the sand for him. So next time he's on, we'll press him on that.